Hello, everyone. Welcome to this webcast from Refinitiv and Reuters. I'm Richard Mabley, Head of News Performance at Refinitiv, and I'm going to moderate today's webcast on how the European Union is coping with coronavirus, make or break. Before we start, a couple of housekeeping points. If you've got questions, you can submit them via the Q&A box on your screen, and we'll try to get to them towards the end of the hour. You can also use the toolbar at the bottom of the screen to access technical support and speaker biographies, that sort of stuff. There's a survey if you want to fill it in as well on that toolbar. So, to the introductions. Joining us today, we have Sherry Madeira, who is the Head of Government Affairs for Refinitiv. Peter Tal Larsen, who is the EMEA editor at Reuters Breaking Views. Sujata Rao, who is the EMEA Financial Markets editor at Reuters, and Mark Bendyke, who is the Reuters Europe editor. Mark, let's start with you. Just briefly, I've been looking at my icon screen, reading a lot of news. Seems to be a lot about one particular story, and I don't know what happened to the Reuters sports file. But otherwise, the news seems to be flowing as normal. How's Reuters managed to deal with the challenges of reporting such a huge story without having a physical newsroom anymore?
Yeah, no, it's been remarkable. I've been in Reuters for over 20 years, and I couldn't have believed that every newsroom in Europe, which would normally be home to really over 800, 900 people, including visuals, for example, would be completely empty, and yet you'd look at your screen and you would find that it's looking like business as normal. So behind the scenes, it hasn't been business as usual. Obviously, people are working from home, just like people in the audience today have been going through the same thing. A typical bureau would obviously have, we have a nerve center in every bureau, which monitors everything from central banks, government statements, all sorts of local media, and that's usually a really difficult operation to maintain and to shoot out news in real time. But that's happening from people's kitchens. It's happening from their living rooms, and it's been a very, very difficult thing to hone. But 4 weeks in, certainly in the UK, it feels like we've been sort of in this operation for at least 4 weeks. In other bureaus, it's a little bit less. But so far, touch wood, so good. So yeah, it's been remarkably smooth.
Fantastic job. Okay, thanks, Mark, for sharing that. So on to the meat of the webcast. I'm just going to start by just praising very quickly what Europe has done so far to support the economy. Over €1 trillion initially of monetary stimulus from the ECB. Interest rates on loans down to minus 0.75%. The suspension of limits on government borrowing to allow fiscal stimulus. Then on April the 9th, finance ministers agreed €500 billion worth of fiscal support. So that's over $3 trillion of support. And then we have the ESM, the European Stability Mechanism, making another 240 billion of cheap credit available, and the EIB is standing by as well. These are huge numbers, no doubt about it. Mark, is there the political will to do more? We have a big meeting coming up next week of the European Council. Is there the will to do more at this point, without getting into the gruesome detail that we're going to look at later?
Well, look, I'm in touch with all the bureau chiefs in Brussels and in the south and in the north on a daily basis, and I think the consensus is yes. I think there's a will to do more. The question as ever is how. I think that's where everything's getting bogged down. I'd be interested to hear what Sherry thinks, but it seems as ever national politics comes squarely into play at this point. In the south, the stakes are obviously very high in places like Italy. It will be seen as a massive failure of the whole EU project if they don't do something more. In particular, when we talk about Corona bonds or Eurobonds. The other side, I think people forget, is that there's a lot of politics in the northern states as well. and they're constrained as well in what they can do. So even though there's been a bit of movement in Germany, for instance, I mean, after all, the Growth and Stability Pact has been suspended, state aid rules have been suspended. So there's already been a little bit of flexibility, let's say in Germany, for instance. They've gone a bit further issuing debt, but there are real red lines domestically in Germany as well, and we all know about the Netherlands. So I don't have a crystal ball, but I would have thought there will probably be a fudge next week that gives the impression that they are going further and they are doing more. But I'm not sure the South is going to get what it wants, and that the integrationalists, the people who, France, Italy, Spain, for example, are going to get what they want.
Okay. Let's go to Peter on the question of whether the central bank has done enough to reduce financial stress, in particular when you compare what's being done in the US. Peter?
Well, I think the central bank has done a lot. The ECB, after an initial gaffe by Christine Lagarde, where she kind of said that the ECB was not there to close the spreads on the different yields on government debt in the Eurozone, which freaked everybody out. She then very quickly turned around and got everybody to agree this, or at least a majority to agree this 750 billion euro pandemic package, the PEP, which is pretty extraordinary. And I think one of the big, if you compare this to the old battles over the Eurozone crisis in 2012 and immediately after that, when Mario Draghi came out and delivered his famous "whatever it takes" statement, he then had to spend several months going around sort of putting bones on that statement and coming up with something that people would agree to. And so this has actually happened a lot faster. And there does seem to be more of a consensus. And you haven't heard countries, even the Germans, saying we're not happy with the ECB buying all this debt. So I think there's definitely a sense that this is a unique crisis. It's not a sort of a Eurozone crisis in the sense of sort of we need to blame the Greeks or the Italians for being irresponsible. Everybody's affected by this to a greater or lesser extent, and that some of these measures can kick in pretty quickly. So, I think the other thing I guess I would say is it is instructive to compare the US and Europe. The ECB obviously has constraints that the Federal Reserve does not. But also when you think about the structure of the economy and the financial system, the Eurozone is much more dependent on traditional banks. The US is funded much more through capital markets, and the Fed has therefore also done a lot more to support capital markets, I think, than the EU does. But I think that's more of a reflection of the two different situations that those economies are in.
Right. Okay. Thanks, Peter. Let's just have a look at the markets. If Sufyan, if you could put up the slide we've got on how industry sectors have reacted. Sujata, we're heading into results season. What are the markets looking for? I mean, the Q1 results, in a sense, are sort of out of date because a lot of the Q1 was before, or part of Q1 was before the crisis really took hold. What are people expecting from company results? What are they looking for beyond the raw numbers? Sujata, I don't think we can. We're not hearing you at the moment. Try again. We seem to have lost Sujata there. Sujata's dialed out and is dialed back in again. Perhaps we could. Peter, perhaps I could go to you. Oh, there we go.
Okay, hi.
There you are.
Okay, excellent.
Yeah, loud and clear.
Q1, as you said, it's backward looking, but it's still valuable because first we get to see what kind of damage we've got, how bad it's been, because actually the COVID damage really kicked in around March. So we're going to see how much damage that's done. And then we also get to see what kind of outlook they provide, the companies provide. What kind of guidance they give on the next quarter, what kind of share buybacks or dividend plans they have, and what their cash flow position is going to be, cash position is. So it's still valuable. And it's interesting to see that European earnings and European Q1 earnings are going to be down, like I expect it to be down about 20%, whereas for US, it's a bit less. It's about 10% in the US. And same for second quarter. Consensus expectations at the moment are like 30%, minus 30% for Europe in Q2. And for US, it's minus 20%.
So Europe for a long time, since 2011, has really underperformed the US on the equities front. So what you are suggesting perhaps is that we might not expect to see that that differential, that price to earnings differential change, for the foreseeable future, and perhaps even get worse.
It probably will. The one thing about big difference between US and Europe, you pointed out earlier that it's a very loan dependent economy, bank dependent economy. So a lot of the companies in Europe are kind of what we call old economy. A lot of oil companies, a lot of industrials, whereas in the US, the biggest companies are the tech firms. So things like Netflix or Facebook, which are probably going to ride this out a lot easier. So they make up a big part of the US indexes.
Right. Yeah. Very good point about the difference between old economy, new economy, tech versus industrials. The issue of corporate credit. I know that Reuters doesn't. IFR does a lot of reporting for Refinitiv on corporate credit. That must, though, be a big story for the equities market as companies begin to get stretched. Is that something we're going to see come out of results, or is that something that's going to pop up, across individual companies and take us by surprise?
Richard, it's already popping up because we're seeing that in ratings actions. The agencies have been fairly brutal already, some people think.
Yeah.
So we've had a lot of so-called fallen angels, which are effectively companies that were investment grade but are now junk rated, which is below BBB minus. So these companies lose access to, they see their funding costs go up quite a lot. They're often kicked out of investment grade indexes, and sometimes they're not eligible for central bank purchases. So in Europe, we think that it's quite staggering. There are about €75 billion worth of banks and financials, which are BBB minus rated, the lowest rated investment grade ranking. Right. So if those get downgraded, and a substantial portion of those are going to get downgraded, so their borrowing costs are going to go up. We're going to see a big expansion in the junk credit market in coming months. How bad it's going to be? We have to see.
Okay, Peter, have you got a view on the credit market?
Yeah, just to follow up on what Sujatha was saying. I mean, I think this is really the sort of the key focus at the moment for companies. You'll see every statement that you get in terms of earnings. Companies will start by talking about how much liquidity they have access to. What measures they're taking to conserve cash, to draw down credit lines from banks and stuff like that. And that's really the thing that people are focused on. I mean, that's the one thing they can do. It's much harder for them to talk about what they think is going to happen to their business or their earnings in the future. And then when you look at the sort of what's happened in terms of the official response, there's been a real effort to try and sort of shore up the credit markets, particularly by the Fed. And that's really a reflection of the changes that have happened in the credit markets over the past 10, 12 years since the last financial crisis. You had a deliberate regulatory push to try and increase the amount of capital in banks, and also a consequence of that was to shift a lot of activity that was previously happening through bank balance sheets into the capital markets. And so through exchange traded funds and through collateralized loan obligations and direct lenders and mortgage REITs and all these kind of instruments that have exploded really in the past 10, 12 years. And those are now being heavily tested by this crisis. And so what you've seen with the Fed is to come in and support not just investment grade credit, but actually a week or so ago come in and say, we're going to also basically buy, those fallen angels. Will buy the debt of companies that used to be investment grade but might not be investment grade anymore, and will buy exchange traded funds that might have junk bonds in them. So there's a real awareness that as these downgrades come through, that you might end up with a credit crunch coming through the capital markets, and the central banks are doing what they can to try and stop that.
Good, excellent. While I've got you, Peter, can you just tell us how the banks are coping with the with this crisis so far compared to 2008, which of course was very much started in the financial system with bad loans to the housing market?
Yeah, I think at this stage, I think all you could say is it's early days, but they seem to be doing better. So they're certainly doing better than they did in 2008, and that's deliberate. I mean, they've been stuffed full of capital. They've been stress tested for very adverse scenarios. In fact, scenarios that are even more adverse than the one that we see at the moment in terms of markets falling and GDP contracting. And so the expectation is that that they should have enough capital. But there is also definitely a sense, I think, feeding onto what I was talking about a minute ago, that the pendulum is swinging back in terms of financing activity, and some of this activity that was taking place through capital markets is coming back onto bank balance sheets, particularly as companies draw down backup credit facilities that they had agreed but they hadn't actually used. And so I think JP Morgan the other day said that it's the balance sheet of its its lending to big corporates at the end of March was 30% higher than it was at the end of December. So it gives you some sense of the sort of vast quantities of bank credit that is being drawn. And you can see also, again, in the regulatory response that people are really trying to sort of prepare banks for the worst. So regulators have said, we're going to let you use some of these buffers that you've built up. They've also talked about trying to minimize the impact of new accounting rules, which force banks to make provisions for future losses that they think might arise. And then, of course, the other thing that's happened more in Europe than in the US is the regulators have basically said, we want you to not pay any dividends. In fact, we don't even want you to pay the dividend that you had already announced for 2019. We basically want you to conserve as much capital as possible in anticipation of what might come. But I think the broad point is the banks are really acting as the sort of the buffers, the kind in all of this, and the shock absorbers, and that's really that's what they were designed to do.
Yeah. Okay, well, let's move on to Italy, which, financially speaking and pandemic-wise to begin with, was the focus. Although thankfully we seem to be over the crest of that now. Italy was arguably, after Greece, the biggest casualty of 2008 from an economic point of view. No growth, net growth since that point. Sherry, what does this mean for Italian politics and anti-EU sentiment or pro or anti-EU sentiment in Italy?
Thanks, Richard. I think it's a timely topic as Italy is obviously one of the worst hit nations in this crisis in Europe. And it was not exactly in rude economic health leading into this crisis in the first place. So adding Italy's voice to the fact that Corona bonds are on the table, we mentioned that earlier in the broadcast. I think it might be worthwhile just looking at why is it that Italy is pushing this point. Frankly, it's part of the EU. Its borders are permeable. It has really taken a massive hit in its financial center around northern Italy, in Milan and across the nation. And it is one of the key nations that are trying to promote these Corona bonds. However, the pushback thus far has been pretty robust, particularly from the north. And arguably, perhaps some of the more financially stable economies in Europe. And this is breeding a bit of unrest in terms of the thinking about being part of the EU going forward. So I think that the European Commission meetings in the coming weeks are going to be quite seminal in terms of how is it that Italy is planning to come out of this, not only as we talk about now an exit strategy in terms of opening up the economy, but also how it is that it's going to become apart or pull apart from the EU. Financially, it really has few levers to pull now. And so therefore, it really has, on one side, a reliance on the European structure in order to be able to leverage its way out of this crisis. However, it also may be thinking about its own exit strategy quite independently if there isn't a coming together of, a shared risk through something like a Corona bond. At the same time, we call it, I think everyone quite likes a new instrument name like Corona bond. We've seen a lot of different names for instruments over the course of the last 10, 15 years. And this is no different that people's minds attach to it. But the devil really is in the detail. The point here is to actually share the risk across the Eurozone. But at a time like this, when some countries are talking about joint and severable liability, that undermines the entire purpose of a Corona bond. So I think that there are some fundamental decisions that need to be made over the course of the next week. And indeed, I think that it could change the sentiment in Italy and actually in other southern countries like Spain. We can't just isolate Italy, but Spain is working through that as well as they are starting to open up. We've seen over the course of the last few days, other places like bookshops, some children's clothing retailers, et cetera, are starting to be opened up in both of those countries. And what that could mean for a future spread, a second peak, et cetera, could end up extending this economic crisis. So I think the next few weeks, we're going to have to see how not only the economic situation gets moved forward, but also that feeling of being in this together, and if that is a reality or if it's a real fiction. Okay.
Thanks, Sherry. Sujata, what are Italian bond markets telling us about the political situation there? Initially, the spread versus German bonds went out, then it came back in again. But it seems to be okay at the front ends. Further out, perhaps some greater worries. What's the latest on that market?
I think the bond market is telling you very clearly what it wants, because we saw the spreads start rising again. And I think day before yesterday, they went right out back to before the time when the ECB came out with its PEP instrument. So what that tells you is bond markets want more, and they want Corona bonds. And they're going to be pushing the ECB further, because it means, so the basic difference is that Italy's paying about 1.8% for its 10-year borrowing. Germany pays minus 0.5%. So there's a 2% difference. And that is not sustainable for Italy, given its debt levels. And what markets want to see is, and Italian politicians as well, because they know that borrowing more, even at a lower cost, is going to add to Italy's debt. What they need is borrowing at a 0% cost, which is what a pooled bond would give them.
Yeah.
So the spread's going to keep testing Italy, the ECB. The spread's going to market's going to keep testing ECB by widening the spread over Germany.
Okay, understood. So let's get into, the big central issue is Corona bonds or not, or a fudge, as Mark said earlier. It's sort of almost a terrible irony that the mortality rate from the virus seems to match the political differences between North and South. There's been a much greater mortality rate in the Mediterranean states versus Germany and its northern neighbours, the eastern states, the Baltic states, and that's sort of reflected in this desirability of a mutual debt instrument. What can we expect from next week? Mark, do you want to kick us off on this? The meeting is, the European Council meeting is on Thursday. Where do you think we are now in this debate about Eurobonds or not, or maybe a fudge of some sort?
Well, I mean, I think politically it's difficult. So as I said before, I think the will is there to do something. I think it's the how, and I think that gets very, very technical. Just in the way as they announced recently that they would allow countries to borrow on standard conditions from the ESM, but didn't sort of spell out exactly what those conditions were. And both sides sort of hailed it as a success. And I think on Thursday, there's no clear outcome. There are possibly like 4 different types of options, all the way from sort of a kind of a Eurobond light, and then using a special purpose vehicle, all the way through to what would be victory for Macron and Conte, a Corona bond. But there's an awful lot of politics which makes that, I would suggest, very, very, very difficult to pull off on Thursday, unless there is some sort of complicated fudge which enables both sides to claim some kind of victory. But Macron said last night, for instance, in an interview with the Financial Times, that the whole EU project was at stake. The Eurozone could even collapse if this decisive moment wasn't sort of grasped and the EU got together, with a Eurobond or a Corona bond. I don't know if that's true, because if you look at Italy, actually the populists are not doing well out of this at all. Salvini has lost support in Italy, not gained it. Conte is doing better. And in fact, the populists in Italy are essentially trying to fight off the perception that they screwed up this this whole pandemic, because the Lega runs both Veneto and Lombardia, which were the 2 hardest hit regions, which really suffered a big loss of face as kind of like the gold standard of administration in Italy. So even though Macron uses this running up to Thursday as the big threat, that populists are going to take over, that Salvini's and the Le Pens of this world are going to seize the moment, it actually doesn't look like that's actually happening.
Yeah, that's interesting, because you might expect that to happen as a result of something like this. But as you say, the Lega is running the north, where it's been, the virus has been at its worst. What do you expect to happen in Italian politics? It's obviously one of the most difficult places to predict. More governments post-war than any other part of Europe by a long stretch. Could Italy be heading perhaps for a technocrat government? They seem to be, in times of crisis, likes of previously Mario Monti. Is that a possibility, do you think, or is it just not even worth them trying to work out at this point?
I don't think so. I mean, there's talk in Italy of getting Draghi back to head up a technocrat government. I don't think anyone has the appetite for Mario Monti anymore, but certainly that's the talk. People are calling for Draghi to come in. But I think at the moment they're kind of in this kind of very tight embrace, mainly for survival, both the Democratic Party and Five Star Movement. I think they'll hold together because they just have to for the moment. The real test will be in the recovery phase. I think that's when we'll really see how much glue exists. I mean, they wouldn't have to go to an election otherwise, I think, till 2023. Otherwise, no one gave this government a chance of even getting this far. But I think that's the dangerous phase for the populists and the centrists, is when we get past the acute pandemic phase, and then we're looking at the recovery, because that'll be very, very difficult to manage.
Yeah. Okay. Peter, can I ask you an issue which seemed to come up overnight? Bruno Le Maire, in an interview with a Greek newspaper, brought this up. There seems to be this discussion about the difference between liability for a Corona bond, whether that be joint and several, which you would need for a mutualised debt, or simply several, which would appear to defeat the point of the exercise. Is this a sort of typical EU fudge that we're heading towards?
Well, I mean, yes. The short answer is yes. There probably will be a fudge, because that's kind of how the EU operates. But within the fudging, there is usually some progress. I mean, this debate about a sort of Eurobond is not new. Obviously, it was aired quite extensively during the Eurozone crisis, but sort of vetoed mainly by Germany. I think and there are lots of ideas floating around again this time, but I think it's important to understand the distinction. I mean, really, what we have had, and we have had Eurobond, we've had collective European borrowing entities already. The European Commission has borrowed. The ESM, the European Stability Mechanism, which was sort of set up as a result of the crisis, has borrowed and can borrow up to 420 billion, I think the number is. But both those mechanisms so far have been that they would use the collective borrowing power of the EU in order to make cheap loans, which then can be lent on to a country at a slightly higher rate, but lower than they might otherwise be able to borrow in the market. And that's really what the discussion was about a couple of weeks ago as well. And really the feeling is that that's not going to cut it, because if you look at Italy's debt to GDP going into this crisis was 135%. I've seen numbers that suggest that this year, if you think of the sort of the increased borrowing and the contraction of the economy, you could end the year at 170%. And you then, although the ECB is currently mopping up a lot of these bonds, and so there's no immediate crisis, you pretty quickly get into a situation where people worry about the sustainability of Italy's debt. And so then in order to solve that, you would then need some sort of collective borrowing, but also the more important point really is collective repayment. And that, I think, is where the debate will be, is about how that would work and where that would come from. It's possible. I mean, obviously, it's a very contentious subject. The Germans, the Dutch, several other countries are against it. But I think it is quite striking that the heads of state of a number of these countries, including, most importantly, Emmanuel Macron, have thrown themselves behind this idea so publicly and stated it in such stark terms that really this is something that has to be done for the future of Europe. Because I think it just raises the stakes a lot. And it does make me think that there might be some progress on this more than there has been in the past.
Okay. Sherry, would you agree with that?
Yeah, and I think that it's a good time to question why. Why is this the case, and why is it that Macron is throwing his weight so strongly behind this? And as Peter said, this whole concept of debt mutualization in Europe actually has precedent. Often we talk about this being novel and completely unprecedented. It's not true. Back in the 1970s, even during the oil crisis, there was mutualized debt as well. So there is an established framework for this going ahead. But I guess it's a question of right now, how you look at sort of those frugals, the four: Germany, Austria, Finland, the Dutch, who are very resistant to this, versus perhaps, France, who are well supporting some of the southern nations' call for a Corona bond. I think maybe we should think about where the EU is right now politically. There has been, before the pandemic outbreak, there was a real shift towards thinking about collectively how to, create a Eurozone that was more complete, that was more cohesive. And if you use the example of sustainable finance or the European Green Deal, you can see the phrase called the just transition. So not only for the most prosperous countries to be able to embrace sustainability, but actually the entire Eurozone. Let's commute that into thinking about the reaction to the coronavirus. And I think that there is that same core sentiment coming perhaps from Brussels, and now very much led by the French. And again, the just transition concept was led by the French. Perhaps what they're looking for is a just recovery in order to be able to look at also the social elements of this, to make sure that there isn't elements that are left behind. So sometimes this divide of North-South doesn't actually equate completely. And I think that we also need to think about sort of, if we're talking about certain countries pitting their views against others, we need to think outside the Eurozone as well. Right now, who is the European allies? If we look at the Eurozone as a complete set, when you look at Eastern Europe, perhaps they aren't as highly affected by coronavirus right now in terms of death toll. However, in terms of allies right now, where does Asia fit in? China did a massive charm offensive to the European countries at the moment, and is doing so as well with Italy. So it's a question not only of how cohesive is Europe, but also where within the member states are they finding allies outside of Europe, and what will that do to that cohesive nature and the potential for a just transition together through something like a Corona bond?
Mm-hmm. So China, we can turn to China now. That's a very good point. Have you seen, Mark? Maybe you can take this forward. Have you seen China pushing its soft power during this crisis in Europe, in particular, and with the US in mind, because of Donald Trump's isolationist stance? Is China in a position to become a closer ally of European countries?
Yeah, definitely, Richard. I think we've seen that already in several different ways. Obviously, the supply of medical equipment, shipping huge. Sorry, my Wi-Fi connection.
We're losing.
If it turns to be problematic, but essentially, China has made. Yeah. Why don't you go, Richard? I'll
go elsewhere. Sujata, you had a point to make on Corona bonds before we move on.
I'll just say it very quickly. I just think what Peter said, I picked up on something Peter said, which was in every fudge, there's a bit of progress. And that's absolutely right. You've seen that through the crisis, they have moved closer and closer to, so several red lines have been moved aside. And Corona bonds is the final red line. And I think eventually that is it might take another crisis for that to happen. But that's going to go as well, because there's just too much at stake. Germany there's estimates that say Germany has benefited to the tune of around 2 trillion euros since the Eurozone actually was set up, because of cheap currency, because of lower borrowing costs. So there's too much at stake for Germany to let the union fall apart. So okay, that's my 2 words.
While I've got you, just on the China question, are we already at a position, or is this too early to talk about European companies that may become acquisition targets for China, Chinese money?
I think probably there is going to be a bit of that, but I also think there's going to be a lot of pushback, because we're living in a world where there is where we're seeing a bit of deglobalization. So I think more than ever before, there's going to be a bit of pushback against that kind of thing.
Yeah. Okay, thank you. Peter, do you have a view on China, China's influence in Europe, and particularly on the corporate side?
Yeah, I mean, I think, like a lot of these things, this crisis has sort of maybe kind of sharpened or accelerated things that were already sort of bubbling away in the background. And obviously, we've had a debate in the EU about the influx of Chinese companies, Chinese acquirers of European companies, and a concern maybe that Europe has had some vulnerabilities there compared to the US, which has the Committee on Foreign Investment in the US, and therefore can sort of say no to things more easily. I sort of agree with Soraya. I think, with Sujata. I think this is going to. I think there will be a certain protectionist response, and we had Margaret Vestager, who's the famous competition commissioner, who's been a real sort of advocate for competition and for open markets in the EU, talking openly about the other day about states sort of buying shares in companies to fend off Chinese buyers and so forth. I mean, I think that's quite a marked shift of tone. I suspect probably what will happen is that the protectionism debate in Europe has always been partly about trying to stop, one European country from protecting its companies from companies in another European country. That's really been the big issue. And so the dilemma really is how do you preserve that open market without sort of kind of creating an opening for state-funded companies from China or elsewhere to come in and swoop in and buy things up. So I suspect that whole debate will get an extra impulse, and China will try and sort of kind of get involved around the edges, but I think it's going to be harder.
Yep. Okay. Thanks, Peter. Sherry, on China?
Yeah, I think 3 points to add here when we're starting to think about this. And again, no one has a map as to what the future is going to hold. This is really uncharted territory. But I think we need to recognize the fact that China is set at the moment to potentially be one of the earliest in terms of its recovery. And we saw incredible flattening of the curve, Wuhan's restrictions being lifted, et cetera. And so, there is the balance for it may be getting a earlier boost to recovery, but it is suffering as well. In comparison to the growth rates we saw out of China previously, the government there is talking about recession, which is incredible to be coming out of sort of government mouths in China. So, China is dealing with its own internal and domestic issues. So that's point one. The second point is the China and U.S. decoupling may be accelerated due to these internal domestic stresses and strains on the economies in both of those regions. And how Europe is affected by this will be interesting, that there are two sort of giants at play here in battle, and where is Europe's affinity and where are their alliances going to take hold? I'm not sure if that's clearly mapped out because there is some serious resistance to Chinese overtures, but also I think that Europe's been burned by some of the tariff discussions that the US has put on them very recently as well. And the third piece alongside that, China domestic recovery versus suffering and the US-China axis, the third piece is the technology friction. And of course, one of the things we're all experiencing personally, business-wise, and at the government level is the immense shift towards technology being at the core of driving prosperity and resilience within the marketplaces. And of course, this brings back the thinking about Chinese technology being embedded. And of course, there's the Huawei issue that's still bubbling in terms of various different states across Europe having very different views as to how it is that they will welcome or restrict Huawei's access to their marketplaces. And Huawei is obviously a symbolic commentary, and some of those impacts in terms of technology partnerships may actually be some of the leading indicators as to how nation states are planning on their future relationship with the likes of China.
Very good, thank you. And Mark, just to follow up on that, is in this squeeze between China and the US, is the EU in danger of becoming perhaps the biggest geopolitical loser of this crisis?
I think that might be going a bit too far. I mean, certainly, as we've discussed, they've got real constraints. They're not a United States of Europe, so they can't behave like one. And their powers only extend to, only extend so far. For instance, so we found that really wanting in terms of health. That health is a very national agenda, and there have been real problems in Europe in terms of closing borders, the shipment of medical supplies, and really people sort of circling the wagons around their own health systems, for instance. And tracing only happens nationally; it doesn't happen across the EU. So there are real constraints, but I think in other ways they might surprise us. I mean, already, for instance, the EU has, through its SURE program, essentially erected a safety net across the EU for unemployment. Now, whether that some vestige of that remains would be interesting. I think in terms of China, they're obviously circling the wagons around their strategic assets from each other and also from outside. In other ways, they're being courted. For instance, Putin in Russia, he needs the EU now. He wants sanctions dropped. He's under pressure himself. So far from making mischief in Europe, Putin may actually start. We've seen it already. He's sent the military to Italy to help out. He sent all sorts of aid across Europe. So in some ways, I think it's very nuanced. I don't think, but I wouldn't write off the EU is the biggest loser. Obviously, Thursday will be a big turning point, and the reaction to that will be well and truly worth watching. But yeah, like I said before, we're not seeing populists tearing Europe apart during this. Far from it. Yeah, that's what I'd say. Just on China, very quickly, I think we're seeing really tangible signs that, I mean, Putin has muscle and he has energy. China has money and lots of it, and we're seeing that really play out. So in Hungary, Orban has just agreed a couple of weeks ago to classify all information around a contract for a Chinese-built railway between Belgrade and Budapest, and that's a little quid pro quo for the Chinese right there. And they send medical teams into Serbia. Serbia obviously is one of the would-be accession states, and they are well and truly embracing China at this moment for health advice. In fact, China has come in and they're actually running one of their hospitals in Serbia. So we're seeing this in very small ways, and we'll see more of it. But I don't think you could say, in the face of what we've seen so far, that the EU is definitely the big loser out of all this. Okay,
thanks, Mark. Let's just talk briefly about Germany before we go to sum up and go to questions. Angela Merkel now is in the job until the end of next year. The leadership race there, and the big question around Corona bonds is whether domestically Germany insists on sticking with its zero additional debt policy, which will obviously have a big impact more broadly on the debate around Corona bonds. Do you see, Mark, maybe you could just kick us off, any change, any movement there in Germany around this particular sticky issue domestically in Germany, and how does this discussion about the next leadership have an effect on that?
Yeah, look, just briefly talking to our kind of expert, and Andreas Hündker in Berlin, his view is that there has been a little bit of movement, that's for sure. I mean, during the recent April 9 statement on support, it was Germany that intervened, along with Macron, that intervened with the Dutch to get them to take a step backwards. So that was interesting, and certainly the pandemic has kind of already slaughtered a few sacred cows in Germany. But as Andreas tells me, don't forget, Mark, there are populists in Germany too, and they are very real, and they have done very well in Germany of late, particularly obviously in East Germany, but there's also a threat that would come through. The successors to Kramp-Karrenbauer for the CDU, probably the strongest is Merz. He's a conservative as well. So look, the stars don't seem aligned anyway for Germany to really slaughter that big sacred cow next week. But certainly there is movement, but the politics make it very difficult to make big moves, and particularly with Merz looking like a very strong contender to take over the CDU this year, and the AfD, the far right party, they haven't they've been on a roll of electoral wins until this pandemic. So yeah, the picture's complicated. Doesn't suggest there'll be a big move from Germany.
Okay. Well, look, let's run through some of the bigger issues we've touched on. I guess the big question is: are we in for a repeat, even worse, of the post-2008 austerity-driven sovereign debt crisis? We don't know the answer to that. Or do we think that Germany and the northern states are going to have to relent and find another way? So, Jonathan, what do you think the markets are trying to tell us at this point? I mean, obviously the markets don't have a crystal ball any more than anybody else, but people are trading, at least trading long-term debt, which is one way of looking at the issue.
I think austerity is dead. And I think for the time being, can you hear me?
Yes, loud and clear.
Okay. Okay, I think austerity is dead because there's a recognition now that what happened after all the austerity was countering the expansive policies of the loose monetary policy and basically keeping growth at a standstill. So I think that's not going to happen even if some of the spending is pulled back. So what bond markets, we're going to see that we're not seeing the yield rises coming through yet, because we have massive central bank buying. But at the same time, we're going to see that in inflation, I think. And it's interesting to see that we are going to have deflation in the near term, but I think over longer term, the inflation expectations are going to start moving up, and I think that that is something that we are going to see coming through, because we're going to see a lot of spending, kind of helicopter money, and I think that could be if that does work, the loser policy proponents will have been proved right. So I think that risk is quite small that we're going to see massive austerity being imposed again, because it's already led to a lot of problems. Brexit, for instance, populist parties in Europe, and so I think that experiment is going to be too dangerous to repeat.
Okay, Sherry, I'm going to ask you another of the big questions. Can we get some form of mutualised debt without another treaty? And obviously, we're not going to have another treaty next week. But fiscal rules are fiscal rules, and the reason for austerity in 2011 onwards, 10-11 onwards, was that the fiscal rules demanded it. It was a consequence of EU law, not necessarily just a choice.
Yeah, well, that's the question. That is the question that we're all asking and watching, sort of what lead up and what indicators we can get between now and next Thursday as well, in terms of sort of some of those agreements. I mean, my view is I think that I think we will see some movement in that direction. And I think that probably is underscored politically by the need to keep some cohesion in the European project. However, the devil will be in the detail, and it's going to be, we talked about the word fudge a number of times in the last hour, and I think that this is what will come out. I think that there will be some bending on both sides in order to be able to get some of this capital flowing. I think that there is an indication from a number of sovereign wealth funds, from a number of investors, that they would be willing to invest, and that's a key component of this. Creating a Corona bond or creating a vehicle like this does need willing investors. So those discussions I'm sure are ongoing, and they're going to make an influence as to what this looks like.
Okay, so a fudge. Just a question of what flavour of fudge, Peter? What flavour are you going for? Peter, you there? No, I think we've lost Peter. I saw his hands move, but we hear no voice from you.
Sorry,
there you go.
I was on mute. Apologise. I think two things I would say. I think actually the need for something kind of immediate is not as great as some people might suggest. I mean, obviously there's a certain amount of political momentum, and you can see Macron and others trying to capitalise on that. But I think you can basically say, the ECB will buy pretty much any bonds that the Italian government and others issue, but between now and the end of the year, and so that will that will get us over the immediate crisis. But I do think there has to be some sort of indication from the EU about how that Italy is not going to be left to deal with debt of 170% plus of GDP by itself for the indefinite future. If that's not the case, then the market will test the integrity of the euro again, pretty soon, I would think. And so the alternative is to find some way to sort of mutualize some of that debt. And I think it should be possible to do it in a way that it's a one-off, it's a once in 100-year pandemic, it's nobody's fault. There's a certain amount of solidarity involved in this, and I think So I think if it's ever going to happen, I suspect it happens, kind of in the next 6-12 months. And if it doesn't happen, then I think the market really tests the integrity of the eurozone once again, and it's hard to see how the eurozone survives that in the long run without some kind of movement.
Yep. So, Mark, your view? Peter seems to be saying is that at least for the duration of the bailout for this particular crisis, the EU needs to get closer together. Does it need to get closer together, or will it fall apart? There's no way of staying as is for this particular crisis.
Well, I think there's still a lot of glue holding the EU together. I can see a scenario where the EU comes out of this severely weakened. I don't think it comes out of this really strengthened unless there really is a breakthrough next week, a real turning point. But Italy will be a really interesting one to watch in terms of just how sentiment there and the politics there unfolds, because that could again, it is the too big to fail country. It's not Greece. It is the one that will really test the solidarity of the EU and ultimately the limits to which the EU will go. But as I agree with Peter, that test probably isn't going to come this year. The ECB is standing behind Italy and mopping up everything that it can issue. But as I said before, it's the recovery phase. If you look out 12 months, no one's predicting this to be V-shaped, and a U-shaped recovery in Italy is awful. It is really bad. There's no good scenario about a long. And I also agree with Sujata that austerity is poison. I lived in Milan for the last 3 years. It is poison. That is one way to take a founding member of the EU and drive it as far as you can to the margins. So I think they're smarter than that, though. We'll see, I guess. I'm no expert on, I don't have a crystal ball for the EU, but I can see them being weakened. But when push comes to shove, Italy, it cannot leave the euro without the ECB behind it. It is a total nightmare scenario for Italy. There's no good choice. So I think when you go out, to take Peter's point, when you go out a year to 18 months, it gets very, very interesting.
Yep. Okay. So we will get some clues next week. We clearly won't get the full answer, as is always the case with the EU. And I was at editing the file during the Greek crisis. The next emergency meeting is never the last one. Not until it is the last one, and it's very difficult to predict when that will be. I liked Sujata. Your idea is that the EU spends its way out of this crisis doesn't have the technology companies, as you pointed out. It is old industry, but that the flavour of fudge might be a green flavour of fudge. Is that the way out of this, by spending in an area where the EU has taken some leadership in spending on renewables and green technology? Does anyone have a view on that? Yeah, go ahead, Sujata.
There is probably an acceptance of, there's greater acceptance within the frugal states of green spending, especially as these Germany, Netherlands, etc. And they do need the infrastructure. So I think replacing the black zero with a green zero might be, spending on green things is not included. So I think that might be a useful fudge out of the situation. It gives, so it allows them to kind of stick to the idea of being frugal, but at the same time doing something for the environment and the economy. And I know that a lot of European countries which haven't issued green bonds in the past, including Germany, are preparing to do so this year, second half of this year or early next year. Maybe those programs will have been put off by COVID, but the plans are definitely there and they are going to do it.
Sherry, do you have a view on green fudge?
Yep, I totally agree. I think it's a great phrase that we could coin right here together. I think that the European Green Deal is still going strong. And in terms of sort of the pervasiveness of that policy, having a green flavored Corona bond, whatever that ends up being, I think fits very, very well with the future of where Europe is trying to go. So I see that as being a real opportunity.
Okay, fabulous. Well, look, time is up. That's, I think, a lovely discussion. Thanks, everyone, for your time. Thanks, to the audience for listening in so patiently. I hope you found something useful from it. Thanks to Reuters journalists for joining Sherry and I from Refinitiv. Thanks, everybody, and goodbye for now.
Thank
Thank you.
Thanks a lot.